The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 11 o'clock till noon, Eastern Time, Monday through Friday. My pleasure to be here. Dow's down 93 at 18,187. S&P's down 8. S&P's down 6 at 2153. A little bit better than the Dow. It's usually the other way around. Comp index is down 24 at 5291. The VIX now is at 13.47. Remember yesterday you spoke about the VIX. I said under the 13th should be buying pressure. In the 13th starts the selling pressure. Most importantly, what we're looking at here in the E-mini shows you a really good example since it trades so many hours a day and night. Excuse me. You've got this wedge formation. In other words, lower highs and lower lows coming to an apex, showing that there's a very tight band now. Above, in this case, at 2146, down 725. A push above 7158 really opens up the higher side of this particular pattern. And a break below 2141, I'd say 2140, starts to move to the downside. And then we can put in that arch formation, which is what I'm thinking will happen. We remain short the Dow. We've added to our shorts. Most important is that the weekly chart, and this is what I'm going to do. I'm going to expand this here. This is the weekly chart. And I want to show you that there's a pattern that we look at that says if it breaks in the Chapman falling axe formation, if it breaks to the upside, it would need 2176. And that would say, great, now we've got 2182.75 as the left side high. And then the all-time high in this contract would be 2185. And that was the round number high at peak D in the weekly chart, and that would target that. I don't think so. I think we're coming back down. And the way I'm looking at it is that there's going to be a potential for an arch formation. That happens very often within this particular formation. And that's what I'm saying is I'm prepared to look at lower lows and lower highs and increase short positions. The 120-minute chart right here, I'll just expand this. I want to show that the weekly chart fractionally made a potential Chapman wave 2-bar reversal in the monthly chart, but the month is young. So let's just talk about the 120-minute chart. Go to the short term, and you can see that this pattern says trading band, mix up between cups and arches, and now we've got our second arch at a lower high. There's a good chance at 2144 we will go low down. 2136 will be major support, and the left side 2132.75 is going to be key in this particular move to see if we remain in a trading band or whether we start to break down. Okay, so let me just keep running the numbers here. And also for those of you who are in the hurricane storm, we wish you well. We're really thinking of you. It's just let's hope this thing just suddenly veers offshore, whatever it does, and it just weakens, and that's all I can say, especially those of you in the Florida area right now. Isn't it amazing? Haiti, earthquakes, and whatever happens to these poor countries, you can expect even worse things to happen. It's just the way nature works. I don't know why that is. And yeah, they got battered in the storm. My daughter has very close connections. People in Haiti says she's just waiting for news, but so far it doesn't sound too good. So let's just hope that everything ameliorates. It starts to there's a decrescendo in this move right now, and that we start to see some better results. All right, let's get on with the market right at this particular point. I want to just jump into the volatility index, and then we'll go through these things in great detail. Volatility index is up 0.71 of 5.47%. It's at 1360s. No great shakes here, but I can just tell you this, that if there's going to be a continuing lower highs and lower lows, you'll see this creep up, and you'll start seeing the 14s, and then you'll see the 15s, and 15.31 is the 200-period exponential moving average. So if there is to be a rally, a sudden turnaround in the market, rallying to the upside, not giving back every day, giving back the gains it made or getting back the losses it made, just chopping in the sideways trading range, then this VIX index needs to spiral down instead of up into the 1220 area, so this market can get back into the 18,500s. I'm not sure it's going to be able to do that. And the S&P back into the 21, let's call it the 2180s. Meantime, back at the ranch, let's go on. The QQQ series made a peak 1, peak C2, C1, C2 in the Chapman wave. That's what I'm calling it for now. 119.22 was the high back on September the 22nd. And then on October, the top on the 5th, that was yesterday, at 119.17. I'm 17, not 16. 17, let me just change that. 119.17 turns out to be what I call in Chapman wave a potential double top, peak C1, peak C2. Okay, now the next thing we need to look at, that's, sorry, that was the doorbell. I forgot to do something. I'll have to do that later on. The IWM. The IWM right now is the Russell 2000, 122.94 down $1. And it's, this is not acting too well. The weekly chart, though, MACD is still okay. The stochastic still good at 86%. At 122.93, you will see a great change if the IWM starts to track lower and go to the 121.74 level. That'll suggest that their weekly chart is starting to weaken. And on the upside, it has no choice. Has to get to the 125s in the next week. Next thing we're looking at here will be the NYA. We may as well do these today. There's not much to do otherwise. Same thing in the New York Stock Exchange. It made its high peak G in the daily, but it's only a peak C in the weekly. This is really confusing. But what's really important is that the monthly chart says at 10,632, it better hold the 10,500 level, because if it starts to take that out, that's not a good sign. Now let's go to the gold. Gold got smashed yesterday. Today, another smash, down 14 at 1254. This is very ugly action in the gold contract. And as I'm looking at it, I'm suggesting to you that it's the dollar that I've been talking about this for about over a week now. I'm saying the dollar seems to be strengthening. I haven't seen any breakout, but today I do see a breakout. Why? Because this is a very quick second inside buy mode in the dollar. But what's really important about it, this could actually recycle. This could become an instant restart right here. This could be E/A. Most importantly, what I've been saying is the dollar needs to get to the 96.80s. It really needs to get to the 97.20 level. If it can get there, I have no qualms about saying, great. This is action that suggests that it's going to try to make finally a peak D in the Chapman wave at 97.57. We'll be watching this really closely. Just a couple of things as we're about to go to a break. I meant to show you this much earlier. Here we go. This is the 10-minute E-mini going to a leg E to the downside in a very big arch formation. And I'll show you the S&P cash right here. And there it is. I've been drawing these, and that's what we're looking at. I'll be right back. Basil Chapman, Target Technicians Hour. Dow's down 107, S&P's down 8. I'll be right back. It's important.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, and the Dow's down 102. Just a couple of things. Yep, the dollar's acting very well right here. And if it fails, it means that it goes back under 95.60. And that says, uh-oh, dollar's fighting. Now, this is very interesting because, look, crude oil is up 32 cents at 50.15. Let me just double check to see if the futures, up 32. Yep, up 32. This is leg C. And the way it's looking, because of the MACD, very strong, the stochastic very strong at 95 in the daily chart, I'm suggesting to you, and this is really unusual, we've got the dollar moving higher and crude oil's moving higher. You've got crude oil moving higher, and look what's happened here. When I go to the USO and I go to the S&P, the SPY is the green, and the red is the USO, which is the United States Oil Fund. Look how it's moving in counterpoint to the market, and that's what's really unusual. And this is why I'm suggesting to you that the short side, for me, is becoming a more viable alternative to just sideways trading at this particular point in many of the stocks and some of the indices, because it is starting to go independently to the downside. In other words, there should have been a move to the upside today with crude oil still moving higher, and there's been the exact opposite. Days young, but that's what I'm looking at. And this says to me that the weekly chart is strengthening in crude oil, and that crude oil, in fact, could hold very well here. It's at 50.11, 48.20s, 48.50 to 48.20. Very good support, even to the 47.50 area. But what's really interesting is the MACD and stochastic are so strong that I would suggest to you that there could be a pullback for a peak C in the next day or so, but then we might even go a little higher for leg D. How high is just a little, it's undetermined right now based on the market. But if I'm just basing it on the pattern that I'm looking at, and this is a question that I got in the email. Remember the H pattern that I drew right here, this one right there? And what I was saying is that if this is a successful H pattern and we can get a turnaround and it closes underneath the left side low of 43.61, and in fact we closed at 43.62 and then 43 we closed above it all the time, it said that's a positive in the sense that you can now see crude oil rally to the next resistance level. So I had used moving averages, but I'd also said that makes it, I'm not sure it can do that, but if it breaks above 48.36, above the high of the week of, the high of the 8th of September, that's going to be very important, especially if it closes there. But then I've got 200-period moving average resistance at 48.60s, and I don't think it's going to go much higher than that based on this pattern. Well, this is the inverted H pattern. And that says, look, this is like a reverse Y upside down. No, a reverse Y. And in this particular instance, not only have we closed above it, you've got a doji candle, which is sometimes a halfway marker, which is suggesting that you could get to the high of the 5th of July of 51.39. Today, we've already gotten to 50.51. So that's important. And 51.39. Now, two things are happening in crude oil. One is you've got the strength in the technicals, and number two is in the daily, and number two is that the price movement breaking above the previous high of the week of the 19th of August at 49.97, that is really a big positive. So I'm suggesting to you, for the first time, I'm saying that instead of just being a rally in the monthly chart with a very strong likelihood that that doji candle of the June will not be surpassed unless a lot of things happen, this is the first time that I can say to you that if crude oil manages to hold this well, if it is only a peak C, this is a B, I'm going to make it a blue B just so it's clearer. If this is the case, there's nothing here that says you should not get to a leg D. You've spiraled away from the 200-period moving average magnet. Now it's a propellant, not a magnet. And the 9-period moving average is very close to crossing above, which says you will still have a little room to the upside when that happens. And after that, you've got to be careful. So I like crude oil. So that was the question here is crude oil, and the answer is yes. Now the oil service is, OIH. Let me go there. Same sort of thing. This is leg B in the oil service. I'm surprised, but it's acting really well. I'm not going to fight this. I think it's acting well enough for me to say that the MACD and stochastic are positive to suggest that the OIH at 29.85, the market vectors oil service ETF, has a chance to go a little bit higher. And if I see, as Stephen Dent says, the IYT, let me look at the IYT. IYT is in peak C, and it says that it should also go a little bit higher. But now this is going to get really interesting. Why? I was looking at CSX last night, and I'm saying to myself, how on earth did I miss this fantastic move? It's got an instant restart. It's in a leg C to the upside, the second one. It's in a new leg E to the upside in the weekly, a leg C in the monthly, CSX core rails. This is telling us something. This is such a fascinating market. I'm looking at a CTAS, which is Cintas Corporation, Overall's Clothing Rentals. We shorted it almost perfectly, and then I got stopped out because it had that gap up from the earnings report. But my suspicion was the earnings report would be good. But when I look at the outlook is not going to be too good. And that's telling me that there's possibly a mini recession unfolding as we speak. So here we are in an area of Overall's Clothing Rentals, and on the one hand, and yet you've got CSX, which is the rails, which is kind of like the commodities. And we do have a commodity instrument in our portfolio that's done extremely well. So some of the commodities are doing very nicely, regardless of gold and silver pulling back so sharply. So here's CSX, and I just wanted to say that. Let me see what Federal Express is doing. Federal Express is pulling back. It's okay. It's just okay. I don't know. I'm not sure it's going to make that C to the D in the daily chart, but it is a leg C, maybe a peak C this in the weekly. So that's acting okay. So now let's go to a couple of other things. Question is, I had a question about the TU, I think it is. That's the very short term. Yes, okay. Let me do a couple of things here because we're about to go to a break. I've got a bunch of calls. Oh, we've got George in New York. George, you wanted to look at?
Hello?
Hi, George.
No, this is Jack.
Oh, Jack. Hi, Jack. How are you? Oh,
I'm
Jack is
good.
first. I'm sorry, Jack in Lakewood, Colorado. Jack, you wanted to look at?
I wanted to look at DSLV, Basil.
Oh, I know USLV. Let me just check that out. That's
No,
is that the silver?
D is in Delta.
Yep.
DSLV.
DSLD. Got it. No, I do not have it. So, is it a V at the end?
Yes.
Okay, so is that the silver something or other? Yes,
Yes.
it's the inverse silver. I should have guessed that. Okay, great. We'll be right back with you. And we've got a break coming up. Dow's now down 81, S&P's up 570. Basil Chapman, Tiger Technicians Hour. We're on with Jack in Lakewood, Colorado. Before we go to George in New York, so we're looking at the silver contract. This is the
Thank
three
you.
times inverse silver, and I'll be right back with you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, there must have been some kind of a story here because we went from down 110 to minus 70 and the Dow minus 850 to minus 450 in the S&P. We'll look at that in a moment, but we are on right now with Jack in Lakewood, Colorado, and we're looking at the DSLV, which is the 3 times short. Are you in this?
No, Basil, that's why I gave you a call. I missed getting in. I was going to get in on Friday and did not get in.
Oh, okay. So, this is one of those cases. Let me just do this on a daily basis.
So
ABC.
I'm looking for a pullback is what I am.
Okay. So there are a couple of things going on here. If you don't mind, I'm going to look at the SLV, which is the root. That's the root is the silver contract itself. But I'm just going to go to the SLV because it's giving me a lot of information.
Sure.
I've got a peak F top in the weekly chart, and I've been talking about gold and silver, saying I just don't see it. I think gold is going to be going down. A little later on, I can see gold coming back, but at this particular point, my favorite medium was to look at the dollar as the inverse strength medium. But I wasn't sure just yet at least I wasn't sure how high the dollar would go. And I'll still have to say, needs 97.20 to say to me, okay, now there's a chance it could scream all the way up to maybe even a new all-time high or a recovery high that is in the dollar. Meantime, in the silver contract, the silver SLV, which is the iShares Silver Trust, trading at 1639, down 46 cents, went right through the 200-period moving average, and now it's on the simple moving average. So I think it's very close to at least a little bit of an attempt at a bounce. But this is the big issue. Because you missed such a, now we can look back and say, now that you've missed such a fantastic opportunity,
Really?
That makes it so much harder to get in because you're looking at a massive move. If you were going to get into at the 23s, it's up 17, 18% or more since then because it hit a high today of 28.31. Now what do you do? So this is always a very big difficulty for me. For instance, I like to time for my subscribers. We try to time the exact top of major market moves in stocks going from the daily, weekly to the monthly to try to time it. What happens is if in a case, for instance, I just brought up something like CTAS, which I did the analysis perfectly, but we just missed. We got stopped out by like a dollar, and then it came tumbling down. Now, I've got to change my mindset. It used to be like I did this with the home builders for a long time, and when we finally got a really good trade in the home builders back in 2005, I took the one trade, we made nice money, and then I left it alone. Because I love to time the bottoms or the tops, and if I miss it, I kind of say, oh, well, I missed the best opportunity. But that's not really the issue. So for a little while now, I've been changing my modus operandi. So I'm trying to discipline myself to say, okay, if you've missed the move, but you've got the direction and you've got the tide, that the tide has changed either to the upside or the downside, what kind of mindset have you got? So now in your case, you've got a mindset that says two things. You've got a mindset that says, oh, I missed the best opportunity, the best risk reward. Now it's higher, it's much, much riskier. Where do I get in? That's number one. And number two is now when you get in, you have no choice but to put in some kind of a stop. And because there's been such a big move, the parameters intraday, even just on an hourly basis we've seen, can be very big. So that says try to pick a spot in the DSLV, and I'm not sure yet whether I can call this a leg D. I'm going to do this in a Chapman wave methodology right now. I'm going to put in the notation. Here we go. This is peak A right there. This is the vehicle that you want to trade, so I'm using that D. Let's call this a brand new A with an E/B. Okay. So I'm going to suggest to you that just in terms of risk reward, because I think it's going to go, I think silver's going to go lower and the dollar's going to go lower. One of the things that you can do is you could just nibble here saying at 27.57, I have the risk of a 10 to 12% pullback But what I really want is not to miss another move to the upside that takes it into the 30s. That's one mindset. The other one says maybe I could do that, but then the price that I want this is at around about 25.50, 2 points lower. I don't know if I can get it, but that to me would be a safer bet at 25.50, and I would put in a $1.80 stop. Now, why do I say that? Because the SLV, I wonder if I can do this on the silver contract. Let me just check the silver contract. Yes. So in the silver contract, what I'm really looking for, it's at 17.35 right now, down 0.34 cents, down almost 2%. It's this area here that it's holding with support at 17.24. But my eye says, if I can just expand this a little bit, my eye says that there's a good chance it's going to try for the high that was peak C on the week of the 18th of March at 16.35. So that, I think, coincides a little bit with what we're looking at. So I'm going to say to you, if I can get back to it, DSLV, if you want, you could just nibble. I really mean nibble like 10 shares just to get a feel for it here and say, look, I've missed the big move. But the actual position you want to put on would be around about 25.60-ish. I'm not going to be able to give you the exact figure because I need to see if there's a peak today with a lower high bar tomorrow. But I'm thinking somewhere in the 25.60s, that's where I would start a position. And even there, that would have to not be a full position. It's like a 1/3 position.
Okay.
Okay, because you have missed the takeoff itself. Doesn't mean to say it's going to stop going up, the DSLV, but it does say, hey, risk reward. Just because you were nervous the other day when you had a better entry point, now it's even worse, right, for nervousness.
Yes, it is. Hey, Basil, just while I have you on the phone, where do you think this could possibly go on the upside?
Well, if I'm looking at on the upside, 31.94 is the 9-period moving average, and that's kind of where I would go one step at a time. But if silver and gold, if I'm correct, that this is a very big single leg 8 to the upside in the monthly chart, then silver and gold could pull back a little further if the dollar is going to climb more. I'll only know that by over the weekend when I do my homework, because we have a Friday close on the weekly charts. But my thinking here is that the dollar should move higher and gold and silver should continue the pullback. And my thinking is, if you don't mind, I'm just going to use gold for the moment, and I'm going to say
Sure.
On the monthly basis, my target for gold was 12.88 as a first level of key support. Now I think it can give back, well, I don't know if it can go to 12.09. That's the start of the move back in June of this year. You know what? I'm going to say to you that at 12.56 gold, I'm thinking that maybe 12.45 to 12.36 would be my next very big level of support. And in silver, since that's what you're trading, silver would be somewhere in the 1650 to this candle low bar of 1630. So that's kind of what I'd be looking at. I hope that helps you.
All right, Basil, I appreciate it.
Thank you very much for calling.
Thanks.
And let me know how it goes.
All
so that
right.
was George. That was Jack in Lakewood. We're going to go to George straight off this break. I'll be back with George. Dow's down 83.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and we're back with George in New York. Hi, George. How are you?
Basil, good morning.
Good morning.
I wanted to look at NVIDIA today, NVDA.
Okay, and what's on your mind?
Well, I'm long NVIDIA. And, yeah, exactly. You know?
Well,
and
first of all, let me say congratulations. This has been a spectacular move. This, I'm afraid, I'm lumping into the category that I've got that are spectacular stocks that are getting a little bit overbought. And in NVIDIA's case, this is NVIDIA core graphic processing for workstation, games, mobile devices, etc. Trading at 67.24, down only 99 cents, but it made a Chapman wave 2-bar reversal at a peak D on the 4th of October. It went to 69.70. Then the next day it went to 69.58, just 12 cents lower. And today it's gapped down. The MACD in this particular instance is, let me just I drawn this vertical line a while back. I'm going to do it one more time, and I'm going to show something very interesting. The high that was made just 3 days ago was an all-time high in a parabolic move in the monthly chart, and the MACD was good, but way below where it was making highs in the 63s way back in mid-August to late August. And then what happened was, if you look at the stochastic has turned down already as it was going to the high. The stochastic was already going from the 96, I think, area to 84, where it is today. So I'm a little concerned. Now, NVIDIA, you might recall, is one that I've been looking at as a potential short for a long time. Of course, it was a little dumb, because what I should have done was what you did and just had it as a long position and said, when you give me the signals, I will change. But I didn't do that. I just waited patiently. This is the first sign that says to me, we've just had, I don't want to mention the names, but we've got a couple of stocks that have been absolutely superb, outstanding performers all the way through from 2014, 15, 16. And this is the first time that we're starting to see a break. And that's saying to me that there's a chance that we could be looking at some kind of a consolidation here going into maybe the November elections. I'm not sure yet, but at least for for October. Now, in terms of your position, all I'm going to say to you is I would hate to be the one to say, get out of the position when you've been long and it's been a fantastic trade. But what I am going to say, and I feel I feel a lot more conviction when I say it, is that this is the area that I would take something off. If you haven't already, I would absolutely take something off now, because I don't see that much to the upside. Yeah, maybe it can go to 72, but I think it's before it goes.
That's what I'm feeling also. I agree.
Okay,
I did all this morning. I did an analysis, an updated analysis, because I always follow my holdings. But with that said, this is really overvalued.
I was going to say to you, by any criteria, I really don't know what you're looking at, but I can tell you on a fundamental level, the way I'm looking at this monthly chart, by any criteria, unless there's something we don't know about and it's a takeover or something, the monthly chart is suggesting that it really needs, and if not price, it needs time consolidation between 67, where it's just made 69, where it just made the high, and probably 62, maybe even 58. And that seems to me over the next few weeks, the next 2-3 months, you might see it pull back. But I would not tell you to get out of everything, but I would say to you, I would consider lightening up maybe a third. You could even maybe do a third and then make a price that says if it pulls back to another number, you can say it's at 66.34, 67.31 right now. If it pulls back to 64.50, I'm going to take a little bit more off, and then I'm going to treat the rest as a core position and let it tell me the story.
Let me ask you quite honestly. I have this at a very inexpensive price.
Good.
I bought it when it was really undervalued fundamentally, way undervalued.
Nice. Very good.
So the point is, I'm up about 400% on this. Do you think I should just pull the plug on it?
I'll
tell you what my concern is. They only have about 500 million shares outstanding, 535 million. The other thing is they're very heavy into gaming chips, which you know.
Yeah.
And a lot of stock trading platforms need to use this chip, of course, to go in between the screens, if I'm not mistaken. Again, David White would be more knowledgeable on this than me. But I do know they've been making inroads in virtual reality chips.
Okay.
And they're also doing artificial intelligence now, where they're, for Nuke, the company that makes robotics, is collaborating with NVIDIA on a new factory.
Oh, I did not know that. Okay. So,
where they actually tie in the chips into the robotics.
So you're actually telling me two things. You're telling me one is that it's overbought, but there's a core of the company that is still very strong.
Right.
And I think, well, that says to me that maybe you could even take half off and then try to keep that other half. I mean, let it tell you after that. That's the way I would look at it.
That's what I think I'm going to do today. Because it's definitely fundamentally, for this present year, it is overvalued. That's
but
guaranteed.
as a core business, you may be looking at something that pulls back and then starts a whole new phase to the upside. That's why I wouldn't be surprised if I articulate what you have said to me, then really what you're saying is, I'd like to take a chunk off, but I really would like to keep something because it's still a very good business. And excellent. I think you've already told me what your answer is, so I'm in agreement with you.
All right. Appreciate the advice, Basil.
It's your advice and your trade. Fantastic position playing.
Congratulations. I like CSX. I have it also. It's very good. I bought it at about 27 and change.
Oh, well, it's trading at 30.88. It's still looking very good.
And it pays a dividend, so we're fine.
Oh, very good. Nice.
All right, Basil.
Thank you, George. Thank you so much.
Have a good day.
Keep well. You too.
Thanks.
Let's go to Scott in Safety Harbor. Scott, how are you? Scott, you still there? Scott, just say hi. I'm looking at FTR. You're looking at Frontier Communications. I wouldn't be trading this right now. Let's it settle at 396. Let's see if it can hold the 390. No, let's see if it can hold 387 area. If it breaks 387, it can go 387. 381. I'm sorry, 381.
Well, you made the call on it, Basil. You called it last week. You said get out last week. It was a great call.
Good. So I'm still saying be careful. It's this is dangerous. It's just dangerous.
Let's touch on Alcoa for a second. What do you think about that now that it's the $30 stock?
Well, Alcoa was on my list today that I didn't put it in. Did I put it in? I think I took it off. It was on my list today, and I thought, you know what, I might nibble at this because for the automobiles companies seem to be doing okay over the last 2-3 days. That means that Alcoa should be helped a little bit. I like it. I think it's a trade. I'm looking at A. I'm sorry, Alcoa. Let me go back to Alcoa. Hold on, I'll be with you. I was looking at A, which is Agilent, which is looking quite good. Oh, Alcoa is up very nicely, up 62 cents. I'll be right back, folks. Basil Chapman, we're on with Scott, and we've got Ben waiting in the wings. We'll be right back. Now's now only on 21.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. A very big turnaround in the market. Dow's down 13. S&P is now up 1. Wow, I don't know. There must have been some kind of news. Let's go back to Scott, and we were looking at Alcoa AA. So today was that conversion. It's trading at 31.81.
Right.
And I would have been confused there. Probably wouldn't have got the position because I would have been calling it the wrong number.
Either that or you would have got up and been very, very excited. Like I'm sure a lot of people were. But
Right.
It's hard to understand because they don't give people any warnings on these things,
I know, it just happened. All right, so are you back in it?
No, I'm not.
Okay, so this is leg C. I think it's acting very well. And now this is what I'm going to say to you. Let me just quickly change between X. Yeah, X is also moving up today. This is a very interesting session because we've got this rotation going on where the weak stocks remain weak and the strong stocks have had another little kicker to the upside. What I'm going to say to you is Alcoa is in play. I would think that at 31.80 trading right now up 60 cents, the 32.91 high of the week of the 29th of July would be a target. I would love to see a pullback to get into it, but I think that it's going to go higher, and the support that has to hold, let me just quickly get the 120-minute chart, is 31.10 to 30.90. That's going to be really important. I am not sure it's going to actually pull back that far, but it's acting very well. So, yes, it's in play.
Right. Okie doke. Thank you very much.
Hope that helps you. Thank you for calling, Scott. And let's go to Ben in Tallahassee. Ben, how are you?
How are you?
I'm well, thank you. Before we run out of time, you wanted to look at the GLD, right?
Yeah. Real quick, could you just confirm the USO? That's in leg D on the daily and
USO
leg F on the 120-minute chart?
A, B, C. Yeah, I'm going to call that leg D in the daily because it's basically picked up the previous peak C. So it's D, and it's just trying to get above the 200-period exponential moving average is 1148, up 12 cents. And the 120-minute chart, I haven't done it, is ABC, 1C2. I'll start that again, ABC, D, ABC. I think it's in D right now. I did it real quickly. I had it notated, but I can't see where it went. So, yeah, I think it's D. But most importantly, what we're looking at is the MACD is very strong, and the stochastics at 94.28. So this is, I think it's going higher.
Got it. Just wanted to, yeah. So then my question on the gold, the GLD, is there a point in time where you would say would be real strong support?
I'm going to try to base it as much as I can on the action on the dollar. And so far, the dollar's done what I was looking for, but we don't have a trade. It's just that it's done what I thought could happen. So the GLD right now, the gold spider, trading at 119.75 down $1.03. There could be a bounce, and that's what I was saying to our previous caller when Jack was looking at it. We were looking at getting into
because you have a leg D in the dollar, right?
In the dollar, I've got a leg E actually, but there's a chance that it might be recycling. It's acting very nicely here. It's not great, but it's acting very well. I would say the dollar would be acting great if it can get to the 97s. The moment it gets to the 97s, then the magnet of 97.53, I think it is, 57 becomes activated. That was the high in July. So that's what I would say to you. But in the meantime, I think gold is going to go somewhat low. I think a bulk of the gold move down has been made, but now it's going to be time and price. It just uses up more time and energy. So the GLD at this particular point could bounce. I could even see a bounce back to 121.10, maybe even 121.50. But then I think it starts to head a little bit lower again because of the ugly candle that we're seeing this week. And that's the way I'm looking at it. Hope that helps you.
Great.
Thank you so much for calling, Ben. Always appreciate it. Ben in Tallahassee. And, I meant to say good luck with the weather, but what can I say? Good luck with the weather. Folks, this is going to be a fascinating. I'll be back with Tom O'Brien later in the day for an interview. But in the meantime, I'll see you tomorrow. And just watch this real closely. The VIX has come back to 1305. If it goes into the 12s, the market will move higher. But if it goes back,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.